Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's go back to the gold market again. So, comparison to the forex market, as we said yesterday, it's more interesting than fundamental background, but technically forex in euro currency in particular doesn't show any interesting setups. On the gold market we have different view, so different opposite situation. So maybe the fundamental background is not very exciting, so mostly the same driving factor stands on the market, but technically we have what I call just a perfect trading setup, and this setup we have on a weekly chart. So in the video we will talk only on the technical part of the setup, how to take the position, what levels we will take a look at. But if you would like to know the details of this setup and why I think it's really exciting, you will have to read the weekly report. At least the technical part of this report. This is just a conjunction of the multiple factors, not only technical, but sentiment factors, fundamental factors, all this stuff create a really valuable background that really exciting. And I'm really a bit surprised, guys, why our farmers ignores the gold market, ignores the fundamental discussion that we have concerning the gold. They just deprive themselves really exciting setups, really exciting trading opportunities. Sometimes on the forex market, it's really the time when the market stands quiet and choppy. And when I call in the videos and daily updates that I do not see something really valuable, I mean the setups that we have right now in the gold market. This is not really often you could get this, but the overall combination is just something. So you need to take a look at it, definitely. Speaking on the fundamental part and the sentiment part, what we have, first of all, the reaction on the Fed statement already has happened, as you know, on the forex, on the gold market. It was minor drop on intraday charts that already has been reversed in opposite direction. Second driving factor is the tensions on the Middle East. They are gradually developing, but they are long-lasting driving factors that makes no significant impact on the gold market right now, so it just provides some support. So the tensions stand. That Donald Trump announced another troop sending in Saudi Arabia for supporting the ally. So that also supports the market, but the major driving factors, fundamental driving factors, that is not priced in yet. We see the breaking on the negotiations from the China side on the tariffs. So without no explanation, China delegation has left the negotiations on Friday without no explanations, and that is definitely the risk factor which support the gold, and has been priced in yet. It's not priced in yet on the market. That's the fundamental background in the short term that should support the demand for the gold market. From the sentiment point of view, you know that the waiting period starting in Asia and in India in particular, that triggers the demand for the physical gold. This is the hot stage of the seasonal trend in the gold market. It's most the period September-October when the gold is mostly has the support from the physical purchasing. Physical gold purchasing. So this combination of the factors creates our trading setup. Now we're coming to the technical moment. From the technical point of view, in 2 words, we expect the strong upward action to reach our weekly untouched XOP around 1566, 1570. So it means that we will get approximately $55 rally per contract. So this is really promising and exciting perspective. And on the daily chart, guys, we already hear the screaming, let me out, of those who still take the position based on these head and shoulders that we see right now. We just foresee its failure very soon. So on Monday we should get the upward continuation and hand shoulders will be failed. As soon as market will climb above the C point, the traders will start to suspect something. This will be the first point where the traders who take the position and keep shorts on this well-recognizable pattern will suggest something is wrong. And when start closing trades here, upward action will continue. The last acceleration could happen above this A point as soon as the stops will be triggered here. That will be the reason why the market could reach the 50.66, 50.70, our target on the weekly chart. So currently, be prepared for failure of the setup that is very well recognizable, and that still was valid until Wednesday, Thursday, when the Fed statement was announced. But currently, on the new inputs that we have on the market, fundamental, sentiment, technical, this pattern is doomed, and we intend to take the position on its failure, and we intend to take the long position on the market. On the 4-hour time frame chart, we see that instead of the breakout of the neckline, we've got the wash and rinse. That was particularly the reaction on the Fed statement. This market right now stands in upward action, and take a look at this fast rally acceleration closer to the end of the Friday session. So divergence stands in place. So currently it's very difficult to foresee how particular market will open. I am not excluding the chance that it will be gap up opening, and it's difficult to suggest where we will get the chance to take the position. But let's hope that maybe market will show some reaction on 1530 resistance. So this is weekly pivot resistance one, major 618 fib level. So once market will reach it, maybe we will get some pullback. Wherever this pullback will start, retracement will not be too significant, and because the market stands not at the overbought on the daily chart, and we should keep an eye on the two nearest support levels. So first level, currently they stand 50.10 approximately, first level, and next one 15.05. This confidence support now it's accompanied with the weekly pivot point, but if market will start upward continuation, drifts higher, the levels also will drift higher. So the numbers will be different, but the levels themselves will be the same. So just keep an eye on these two levels for retracement. If it will be kind of the A, B, C, D, guarded triple to buy will be formed, it's much better. Our invalidation point for long-term setup stands right here. It's 1480 lows. This is our crucial level, but at the same time, we should keep an eye on this level, major 618 support, 15 even right now, because that's, guys, the point where the major rally has started. And if our suggestion is correct, and market indeed is tending to weekly target, it should not erase this rally. So this rally should become the starting point of something significant. That's why this is our control point as well. So market should stay above it. Although invalidation point final here, but this is also very important. So market keeps the perfect price behavior until it stands above this level and keeps this rally intact. So we currently could accept the retracement only to this level or that level. These two levels are acceptable. That will keep the purity of the bullish setup. Dropping back to the 15 even, erasing of this rally, this will be warning sign. Starting dropping lower, coming to the 1480 area, this will be actually the challenge of the failure, for the failure of this setup. So that's what we have on the gold market. This will be really exciting, much more exciting than the situation that we have on the Forex. And what is additionally is a pleasant moment that this is weekly setup, guys. So we could get the direction not only for a common week, but for maybe for 1-3 weeks and 2-3 weeks in additional action. And that's not all yet. This rally, guys, will be the preliminary steps for our major retracement on the monthly chart. So we could get later part, take the participation in the reversal of the market. So this is also very cool stuff. So that's setup that we will keep an eye on. Promise to be interesting. Let's see what we will get in reality.